Automakers and governments around the globe are poised to move electric vehicles in and gas and diesel vehicles out. The electric vehicle mega trend is unfolding, and insiders know the time to get in on nickel and cobalt, the two critical elements to electric car batteries, already in high demand, is now. Don't miss this chance to get in on the opportunity to invest in physical Class 1 nickel and cobalt before the mass market catches on. Go to www.silverbullion.com.sg/EV and participate in the electric vehicle revolution.
Hello again, everyone, and welcome to another monthly market update, July 2019. Cobalt is still down but not out, since the electric vehicle industry does need cobalt along with other industries, but nickel has been making outstanding gains this year, and we expect to see more as demand is picking up, adoption is coming online, and the overall industry looks to be undersupplied. First up, from TheGuardian.com, the UK car industry's future hinges not on Brexit, but on batteries. From TheGuardian.com, UK car industry future hinges not on Brexit, but on batteries. Jaguar Land Rover boss says UK needs batteries made in Britain or car makers will leave. The feeling of relief in the British car industry was almost palpable on Friday when Jaguar Land Rover said it would invest billions in producing new electric vehicles in the UK. After the recent closure of two other UK automotive factories in 5 months, Honda in Swindon and Ford in Bridgend, JLR boss Ralph Speth was clearly pleased to have good news for the 2,500 workers at the Castle Bromwich plant. Yet amid the congratulations, Speth also struck a note of warning, not on Brexit this time, but on the future of the car sector in the absence of a British battery industry. One thing is clear: if batteries go out of the UK, then also the automotive production will go out of the UK. The combination of Volkswagen diesel emissions cheating scandal and the entry of Tesla and imminent decarbonization targets have set car makers scrambling to make vehicles powered by lithium-ion batteries. BMW this week will launch its new electric Mini to be manufactured in Oxford, and PSA Group said that if a no-deal Brexit was avoided, it would build its new Valhalla Astra cars in Ellesmere Point, with electric versions expected to follow. Where the batteries will be sourced remains to be seen. A new JLR facility in Hams Hall between Coventry and Birmingham will import battery cells from Asia to assemble into packs, while BMW will import packs from Germany. The opportunity for a global industry enjoying explosive growth is enormous, and without a battery industry, the jobs of 114,000 workers making the UK's combustion engines could disappear by 2040. The government-backed Faraday Institution warns. By then, the UK will need annual battery capacity of as much as 20 gigawatt hours, 100 times more than current production, if it fully grasps the opportunity to make batteries for the UK's 1.8 million vehicles. That would be equivalent to 13 of what Tesla founder Elon Musk labeled gigafactories, those capable of 15 gigawatt hour a year or more. And staying in London, from electric.co, London looks to install as many as 50,000 EV charge points by 2025. London Mayor Sadiq Khan has unveiled an updated electric vehicle infrastructure delivery plan, which aims to put as many as 50,000 EV charge points in the city by 2025, as London looks to become a zero-emission transport city by 2030. The plan looks to eliminate barriers to further accelerate the already rising rate of EV adoption in the city. Estimates show EVs could increase from around 20,000 in the city today to more than 330,000 by 2025, and it looks to address that by installing thousands and thousands of charge points, as Khan calls for an electric vehicle revolution. Transport for London has already committed to installing 300 rapid charge points by the end of 2020, and is expected that over 3,500 slow to fast AC charge points will be installed by the end of 2020. But many more will be needed if the city is to achieve its infrastructure goals,
with anywhere from 36,000 to 51,600 total charge points as needed by 2025. By 2025, with EV uptake in line with the MTS and London's 1.5-degree plan, this could rise to between 2,300 to over 4,000 rapid charge points and 33,700 to over 47,000 slow to fast charge points. The Mayor's Electric Vehicle Infrastructure Task Force expects most charge points will be installed by the private sector, but also notes that further support from the government may be needed. London will also develop rapid charging hubs to serve as high mileage business users, with the idea that these drivers will know a fast charger should be readily available. The city plans to create at least 5 of these easily accessible flagship rapid hubs, one in each sub-region of London, with the first to open in 2020. The plan even addresses concerns that EVs will put too much strain on the power supply, noting evidence provided by the national grid and local distribution network suggests that this can be effectively overcome through better coordinated and smarter use of our power networks. National Grid Electricity System Operator has already announced that Britain's grid will be able to operate using 100% renewables by 2025 for cleaner electricity.
London is gearing up for the electric vehicle revolution, and the nation is preparing by way of building an infrastructure for EVs and making the commitment to provide jobs for the nation as a cleaner source of transportation moves in. Another country in Europe is fast moving forward with the EV revolution, and the interesting thing is that this country is a top oil producer.
From Channel News Asia, electric cars grab almost half of sales in oil-producing Norway. Almost half of the new cars sold in Norway in the first 6 months of 2019 were powered by fully electric engines, up from just over a quarter in the same period last year, ensuring the Nordic nation retains its top global ranking in electric vehicle sales. Tesla's Model 3 was Norway's top-selling vehicle, the Norwegian Road Federation said when announcing the latest sales data. In total, over 48% of all new cars sold from January to June were electric, surpassing the 31.2% seen for the full year of 2018 and making oil-producing Norway the global leader in per capita electric car sales by a wide margin. Seeking to end the sale of diesel and petrol engines by the middle of the next decade, Norway exempts battery-driven cars from the heavy taxes imposed on vehicles powered by fossil fuels. It also offers benefits such as discounts on road tolls. The policy has boosted brands such as Tesla, Nissan, Hyundai, and BMW, which all offer fully electric vehicles rather than hybrids that use electric motors to drive the car, but also have a combustion engine. Brands without fully electric offerings such as Ford and Daimler's Mercedes-Benz have seen sales drop, although Ford and Mercedes are among several automakers that have promised to offer electric cars in Norway from 2020.
Europe is the leader in the electric vehicle revolution, and especially in the Western Hemisphere. And as mentioned prior, the US indeed is lagging behind unless you're in perhaps California. But nonetheless, the US loves the freedom of an automobile, and companies, big companies, know that and are positioning themselves in the US to serve both the US and European needs when EV adoption becomes mainstream.
From Forbes.com, LG Chem close to building a second U.S. battery plant for EVs. LG Chem, the South Korean manufacturer of electric vehicle batteries, is looking at building a second U.S. plant as more automakers increase their investment in electrified powertrains. Reuters reported that LG Chem expects to decide by the end of July whether to build the plant and that Tennessee and Kentucky are likely sites. Production would begin in 2022. The battery maker currently has a plant in Holland, Michigan that it supplies lithium-ion batteries to General Motors. Volkswagen is also a customer. An unidentified source cited by Reuters said that a new plant would supply Volvo, Fiat Chrysler automobiles, and Hyundai, as well as GM and Volkswagen. In 2017, GM announced plans to introduce at least 20 new all-electric models by 2023, while American consumers have not yet embraced electric vehicles outside of the West Coast. Nearly every automaker is investing heavily in the technology, which is a key enabler of most self-driving vehicles now in test fleets or in development.
We've been talking about the electric vehicle revolution, and over again, we are without fail seeing the demand is truly there, and companies are building up and investing in factories. But as companies go forward, each in their own direction and way to supply electric vehicles, different models, different technologies, the common denominator is still, and for the foreseeable future, is nickel and the supply of nickel.
From mining.com, the US and Europe are getting more anxious about EV battery shortages. Automakers to trading houses from North America to Europe are becoming more concerned about future supply shortages of key materials needed for electric vehicle batteries as spending on new production soars, according to the developer of a $1.5 billion project in Australia. More than a dozen parties have now expressed interest in taking up as much as a 50% stake in Cleantech Holding Limited's Sunrise Nickel Cobalt Scandium project. They include companies in regions that until recently had shown less impetus to tie up raw material supplies. It's dawning on North America and Europe that there's a raw materials issue that needs to be addressed here. For the previous 2 years, I've been wearing out a lot of shoe leather and banging on a lot of doors, trying to get interest in Europe and North America with very little success. In the last 6 months, things have changed quite dramatically, says Chief Executive Officer Sam Regal. Volkswagen AG in May picked Sweden's Northvolt AB as a partner to start production of battery cells for electric cars, while the German and French governments have pledged funding and political support for efforts to spur a European battery manufacturing industry. In the US, the number of battery electric models available to consumers is forecast to double by the end of 2021. Melbourne-based Cleantech, which said last month it had appointed Macquarie Group Limited to run a process to identify a partner, is seeking final offers for a stake in the Sunrise project by the end of September and will aim to complete any sale by the end of the year, according to Regal. China's grip on lithium-ion battery cell manufacturing is forecast to loosen through 2025 as new capacity is added close to demand centers in the US and Europe. The scale of planned investments in electric lineups means both automakers and related industries in Europe and North America are focusing on how to secure future supplies of battery-grade nickel and also on ensuring there's sufficient cobalt after the market tightens from about 2021 to 2022. Their minds are being forced to turn to raw materials, said Regal, and they are seeing significant risks on that side of the business. There is also a looming shortage of nickel sulfate, the material used for battery products, with demand forecast to outstrip planned new capacity, BNEF said in a July 2 report. Cobalt demand may also top global supply from about 2025, according to the note.
And as supply tightens, we are now seeing nickel going up on a fast clip. Very strong movement upward in this month of July.
From Reuters.com, metals nickel surges to 11-month high on funds buying. News out of Singapore suggests that nickel prices are jumping their highest in 11 months as some funds pushed up their purchase of the metal pegged to benefit from the burgeoning electric vehicle industry. Benchmark 3-month nickel on the LME or London Metal Exchange climbed as much as 2.3% to 13,980 a ton, its highest since August of 2018. Shanghai nickel also touched an 11-month high of 109,710 won a ton during Asian trading hours before pairing some of the gains and ended up at 4.1% at 109,461 a ton. It's CTA, Commodity Trading Advisors Momentum Buying, that is pushing nickel higher. LME nickel has been the best performing base metal so far this year, rising 30% as of Tuesday, while most other base metals have been falling as investors bet on the rising demand for the EV battery input metal and falling stockpiles.
So there you go. Nickel cannot be denied any longer. We need nickel, and we'll see how nickel continues to do, and we'll keep an eye on cobalt. Although more niche than nickel, cobalt did very well a couple of years back and has since fallen in price, but don't count it out. Let's keep an eye on nickel and cobalt supplies, and I'll get back to you next month with another market update. Take care, everyone.
Excited about the opportunities in the coming electric vehicle revolution and looking to invest in this electrification supercycle? Demand for battery metals like nickel and cobalt is expected to rise in tandem with the increase in demand for lithium-ion batteries in electric vehicles. You can now buy nickel and cobalt parcels with silver bullion and have a direct price exposure to both battery metals. You have the option to buy 2-ton nickel parcels or 250-kilogram cobalt drums. Every parcel will be fully insured against loss and guaranteed to be genuine by silver bullion. Selling your parcels to lock in profits is as simple as logging into your silver bullion account, selecting the parcels, and clicking sell. Buy your nickel and cobalt parcels now at Silver Bullion's website www.silverbullion.com.sg/EV and participate in the electric vehicle revolution.
Interested but have questions? Email us at sales@silverbullion.com.sg or give us a call at +65 6100 3040.